Hello and happy Sunday to you. Hope you're staying well and safe and that your day-to-day family lives and work are starting to return back to some more sort of normal, as it is for us here at C+M. Now, even with this in mind, there's certainly been many lessons learned that we hope to retain and continue from this very insightful Corona period in all of our lives. The most important though for me personally has certainly been about finding my own resilience, family and life balance, and hopefully you've all taken away some pretty good key learnings as well for your own greater good. Okay, enough of the soppy stuff. Let's move right into this month's market pulse and get to the nitty-gritty of what we've actually seen unfold in all things local and property across the last 30 days, and get you back to enjoying your Sunday with family and friends now that we're allowed to, at least that is. Okay, so to wrap up the month that was as we head quite deep into June and the final month of this financial year, let's take a look at a couple of the key factors. So, most importantly for us, buyer activity in terms of property inquiry and inspection attendance is one of the main factors that tends to tell us if the market confidence is in fact increasing or contracting. We can clearly report on the ground in the past 2 weeks, we've seen an explosion of inquiry and inspections compared to the 2-week period prior. Numbers through our new registration-only open homes have been up some 211% from the month prior. Now, last Saturday at C+M Residential, we were quite grateful to meet a total of 143 buyers over 37 property inspections. That's an average of 3.8 buyers per open home last weekend. Now, this is up noticeably from the fortnight prior, where we're only averaging around 1.8 people per average per property. We also held and called our very first auction and got right back in the saddle, and was it exciting and good to be back. We actually had 4 bidders registered, seeing multiple buyers push the price up beyond the $645 to $695 price got on the day, selling for $715,000. Now, interest rates again were left on hold this month, with the RBA citing that this is likely to remain the same at these record low levels for some time, as the global economy seeks to continue to contain the virus and get those big economic wheels grinding and in motion again. We also saw the introduction of the new $25K new home builders grant for property purchases valued below $750,000, which, although it may not directly correlate much into our own established marketplace, as the ruling has now been cleared that this will only apply to buyers entering into a contract directly with a builder. It will, however, see a lot more buyer activity in general, which will definitely be a positive thing for the market and flow on across all various price points as a whole. Now, since they've been allowed, general auction clearance rates in both Melbourne and Sydney have been holding pretty strong. These have been between the 65 to 70% level over recent weeks. That means almost 3 out of every 4 properties set for auction are being sold prior to or on the day, which is showing the resilience of the main capital city markets in Melbourne and Sydney, and is certainly stronger than many of us in the industry were personally expecting. Now, it's certainly been the lower end price point of the market in that sub $750K level, which has been chugging along quite well. Whereas conversely to the top end price points closer to the $1 million mark, they've been needing a fair bit of effective buyer management and that extra work to get them across the line. A great time to consider upgrading if you ever were in recent years, that's for sure. And in the previous month of May, our final numbers at C+M Residential sat at 26 sold and 12 leased, which again, comparative to a few of the years before for the same period, yes, it's a little bit down, but it's still been quite a strong result and much better than we were expecting. So all in all, is the market rebounding and bouncing back? Well, we probably won't know for some months, but I do feel in the next 6 to 12 months, certainly we will be looking back at this period and possibly saying that was the trough or the bottom of the market. So the question is, when do you want to get in? From myself, Claudio Cuomo, and the whole C+M Residential family, stay safe, stay well, keep positive as we say, and finally, get out there and go buy some property.